Jake.
Okay. Trading and investing carries a high level of risk. You can lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities. That's it.
Awesome. Thank you, Thor.
You're welcome.
And with Dr. Melvin and Barbara both being out, we're gonna stay with you and ask you to do the quizzes as well. If you're able to grab those.
Yes, I have them.
Okay. Thank
Okay.
you.
Okay. Quiz number 1. As spectators in the market, we are considered the most important because of what? Because we trade less, because of experience, because we bring liquidity to the market, that is C. D, we take delivery of the commodities. E, not sure. F, all of the above. Or G, none of the above. And I will repeat. As spectators in the market, we are considered the most important because of what? Because of A, we trade less. B, experience. C, we bring liquidity to the market. D, we take delivery of the commodities. E, not sure. F, all of the above. Or G, none of the above. What is it? What say you?
Miss Thor, can you please read it again?
Okay, sure. As speculators in the market.
In the area. I had the problem with that.
Okay. Oh, Lord have mercy.
Okay, again. As speculators in the market, we are considered the most important because of what? Because A, we trade less. Or B, because of experience. C, because we bring liquidity to the market. D, because we take delivery of all the commodities. E, not sure. F, all of the above. Or G, none of the above.
C.
Okay.
You said C, Jamal?
Yes.
I said C also.
Yeah. Can one of y'all tell us what C? It was quite a bit of options to go by. C is what?
C.
Can you bring liquidity to? Oh, no.
That's right.
Yes, it is. C.
It is.
That's
we
right.
bring liquidity to the market. That's
Yes.
C. Okay. P. Brooks says C in the chart. Jamal says C. And S says C. Yeah.
I said F at first. Is that all of them? I don't know. I'm guessing.
It's okay. Yeah, if you heard the options, I think that was saying that you were saying all the above. So yeah, so the question was what, as speculators in the market, we're considered the most important. And why are we considered the most important? That was the quiz. And the answer was C, because we bring liquidity to the market. The fact that we are the ones who actually help make the market work. It's able to work the way it does because of us, the small, considered the small speculators. But the most important thing to remember is that we want to be able to get in the market and get out of the market when we want to get out. And that's what we help the market be able to do. And that's why we're the most important. And in lesson 2, we'll get into more in depth about the different groups in the market, but the group that we in the role that we play, we are the most important. And if you're new to the call, what we're doing, we always have quizzes at the end of every lesson. And we just wrapped up our lesson 10 last week, and we always cover the quizzes throughout the week before we get into the next lesson. And don't feel no way if you don't understand none of these quizzes right now. If you're just coming on for the first time, these are quizzes from the people who just wrapped up the group. All right, so what we have, Thor, was there any more quizzes? That's
Yes,
it?
we have one more.
Okay.
Number 2. Okay. When placing a trade, if you buy a futures contract and your order is filled at the current price, what order is it? A, limit order. B, order of the court. C, stop loss. D, market order. Or E, not sure.
Market order.
Market order, D.
Okay. P. Brooks says C.
D, Delta, market order.
Okay.
Mm-hmm.
Okay.
What you think,
Mine
Thor?
says
Are they right, Thor?
they are correct. It's market
Yeah,
order.
that's right. If you place an order and you feel at the current price, that's a market order. Very good.
Hey D, can you please stop imputing doubt in our minds, bro? I see what you doing, bro. You sitting real fast. You trying to throw the doubt out there, man. Leave me alone, cause I'm struggling. I know it's market order, but don't do that. Love you, bro.
No, man, I actually love the fact that y'all thinking about this, man. It's
Yes,
great
sir.
because
Yes, sir. Yes, sir. I'm messing, man.
in that
I'm
quiz
messing.
right there, it's once you understand,
Yeah.
the orders, that one's pretty easy to get.
Mm-hmm.
But you just have to know the difference between the different orders. But that's in a lesson that we're gonna cover as well.
Yes,
So
sir.
great
Yes, sir.
job, y'all. Let's
Yes,
jump
sir.
into. We're gonna have some training on our most important lesson out of all the lessons we cover. And that lesson 1 is important because it's going over rules that lay a foundation for what we need to learn and understand in order to be successful in this trading journey that we started. The most important thing to understand is that there are rules that you need to follow when it comes to anything. And anything in life, there's always rules. And you don't follow rules, you break the rules, there's consequences. And it's the same when it comes to trading. And the rules are very important. Something I didn't have really use when I first started. But this lays a foundation, so we have this to always know that no matter what we go through the course, the rules are what are always going to be referred to when it comes to any lesson within the course that we teach. So very important to pay attention and know these rules and follow these rules. So, Johnny, would you like to kick us off, man? You want me to?
I'll let you go with number 1.
This a rule that's always very touching for me because it's important to know why you're starting your journey, why you want to learn how to trade, and trust me, at some point, probably more than once during your journey, you're gonna really need to understand and know why you're doing it, because this ain't gonna always be easy. It ain't gonna always be fun. It's gonna be some times where you're gonna have to remember why you started this. Why am I doing this? It's important. You know, even here it is. I've been trading for a while, and then I still have to go through things to make me come back and think about why am I doing it. And before I even get um too deep in that, let me share something with y'all if y'all don't mind. Just recently, um, we had our retreat a couple months ago, our annual retreat, and during that time, there was a lot going on for me when we were having the retreat. And first, let me tell you, I was doing my best trying to just get back in town before people started arriving, and that was a challenge for me. But I was able to get back home before people started coming in town for the retreat. And then I had some issues going on with my ride, with my vehicle. I had to put my car in the shop, and I turned, while we trying to prepare and get ready for everybody coming in for the retreat, I get a phone call that I need a new engine for my SUV, and not I'm gonna be under warranty, so I got to buy a whole nother engine. And then I had, you know, all the people coming in. I got people at the house. One of the washers started to act up, and now it went out. Now I need a brand new washer. And then we got this retreat at this hotel. Well, we've been pretty pretty sure we got an understanding on the contract. And right as the retreat is about to start, we meet with the people, and they giving us a whole nother price based on what we understand the retreat's gonna cost us. And now it is looking like it's gonna cost double the amount that we were told and was under the impression of. So my point is, then I got, I own a truck, and my truck had some issues, and it turned out that it was gonna cost so much money to fix my truck that it made sense that I might have to get another truck. So I had all these things going on, and then I had, some business issues at the same time. And here it is. I'm asking myself, man, why am I even doing all this? Man, it don't even make sense me put myself through all this stress. And this is why I say you're gonna always need to know why you're doing stuff. And it helps me to remember, no matter how stressful I am, I'm not doing this for me. I'm doing this, because I love paying it forward, but I also am doing this because it's something that a lot of people need and can benefit from, and they don't even know it exists. And when I think about why I'm doing it, it brings me back, pulls me back in perspective. And that's why I say it's important to know your why. But nobody even knew I had all this stuff going on, um, because it was just about having a retreat, making sure we had a great time, good experience. But at the same time, I had all this stuff going on that I was stressing over. And I even said to Barbara, man, I don't even know if I need to even keep doing this. There's too much on me right now. And this is why I want to share this with y'all, to show you why I say it's important to know why you're doing what you're doing. And there's just a little bit of reason why I think it's a real important one rule. Know why you're
AD,
great. Yes,
AD,
sir.
if let me do this, please, y'all. If everybody agrees, um, uh, let me speak to your heart, bro. A lot of people do not know what leaders go through. They do not know what leaders go through because a lot of times leaders don't cry. And if they do cry, they don't have the adequate shoulders to cry on sometimes. Bruh, I had no idea that you were going through all of that. But what I do know is this: when you are philanthropic and you're trying to give back, I don't know who on here believes what, but the enemy don't like that. and you are remaining steadfast and unmovable. Because you know I was on the first joint for me in 2020, and you still doing it, and you still here, and you still alive. So that speaks to a lot of stuff. That speaks to a lot of stuff, bro. So I'm speaking to your heart for your heart. Good God Almighty. All right, all right. I'm speaking to your heart for your heart to be encouraged before it gets congested. Lord, have mercy. All right. Okay. Let me start. Okay, so we doing futures and commodities. We not doing preaching. But I had to do that. I had
Hey,
to do that. Yes, sir. I
much
had to do that.
appreciated, bro. Much
Yes, sir.
appreciated.
You still
Yeah.
sitting right there where you were in 2020. And in 2020, you had the other brother with you. I remember that. And you still doing it. A lot of times people do not know what leaders go through. And neither do they ask any questions because for real, they don't want to know. They want you to hold it and keep moving and keep doing what you're doing. I don't look. Okay, all right. So let me do this and I'm gonna shut up. A lot of times when you run into celebrities, people want pictures. They don't ask you how you feeling as a celebrity. They want a picture and then they step off. They don't know what that celebrity is going through. He could be 2 seconds from suicide, but all they want is a picture because they didn't seen you in videos, movies, all this other stuff. Bro, just keep doing what you're doing. Keep doing what you're doing. Keep sitting how you sitting. Keep reclining how you reclining. And bro, thank you for forging through the mess, forging through the quicksand, so that other people who may not know, they'll know.
Yes, sir.
Yeah.
Thank you, Jamal.
Appreciate you, man. Appreciate you, man. Yeah, and I appreciate y'all. Appreciate everybody just working with me. Let me just share that information. I want to, just share that with y'all. That's who I am. I like to be an open book and be transparent. But it was just something I wanted to elaborate on as we were talking about this very important rule. So I won't hold us up any longer. But thank you, Jamal. Appreciate that, man.
Yes,
Over to you,
sir.
Johnny.
Anytime, sir.
All right, so basically we want to know why we're trading. Okay. And then when rule number 2 is have a system.
Mm-hmm.
If we don't have a system that we're working on, we're just gambling. What they say, a monkey can pick a stock, but we need to know that we need to have a system and we need to follow that system. All right. So that's going to take it to you, Delvin.
Yes, and that's important too. You know, that's important too. What Johnny just said. Make sure y'all understand that. And rule number 3, which piggybacks off of having a system, you also need to have a plan. And it's important, to have a plan from the beginning. I mean, from the very beginning. From the time you look at a chart, commodity, you need a plan from the beginning all the way to the end. And that's one of the things we try to make sure we stress on. Make sure you have a plan, but not just have one. You got to follow it. Have a plan, you got to follow the plan. And most importantly, you have to trust the plan. You know, it's going to be times where you might want to deviate and come and go away from the plan, but you got to follow that plan. You got to trust the plan that you have. And there's a lot of times I get in trade, man. I'm gonna tell you, I don't always get in a trade that goes my way. But you got to have a plan and you got to stick to it and you got to trust it. And that's very important when it comes to these rules. Have a plan and follow it. All right. Anything you want to add, Johnny, or you want to go on to the next rule?
Well, I want to stay on time here. Okay, so if you'll talk to our brokers, they say write that plan down. Matter of fact, the trade that you go into, you need to have it written down on paper before you even call the
Mhm.
broker. All right. So rule number 4: treat your trading like a business. All right. Um, I think, what does it mean? What does it mean to treat your trade? What does it mean for you to treat it like a business?
Hmm. Let me say this, Johnny, if you don't mind, man. I thought I was doing that in the beginning, and well, I was doing nothing even close to remotely treating it like a business, and that's what this is. It's a business. If you treat it as such, you know, it'll be that for you. And many of you may know Eric McBride, who's covering these rules with Johnny at the retreat. One of the things that he always said was, if you don't treat it as a business, you're setting yourself up for failure. And I know that everybody's journey is going to be different, and it's your own journey. So if you choose to treat it as a hobby, you have the right and the choice to do that. But if you treat this like a business, it can be a great one for you. In my opinion, it's the best business on the planet. But I just wanted to throw my 2 cents in here, Johnny. But what does it mean to treat it like a business?
Well,
Take,
I
take,
think you're going to find that, if you had a business, I don't care what kind of business it is, would you just get up whenever you want to get up?
Mm-hmm.
Would you want that business to be open during the business hours of the bank or normal business hours? Would you want to take inventory? Would you want to know what your stock is? And we're going to cover, I want to go on to the next one because you're going to want to know, like, when to take your profits, or in your business, if you have a product that you're trying to sell, how much profit are you trying to make off of that
Mm-hmm.
item? Okay. What's it going to cost you to get in? What's your risk associated? There's going to be a whole bunch of stuff associated with treating this like a business. All right.
Mm-hmm. And when it comes to that, like you said, knowing when to take profit, Johnny. I said when it came to me treating it like a business, when I first started trading, man, you know, that's the last thing I was doing. Matter of fact,
Can I ask you a question?
yeah.
So, if you've got a business and you have a really good sales day, you close up shop and go to Disney World.
If you're young and
I'm
dumb
sorry,
like I was,
I couldn't help but think of that.
oh man, yeah, if you're young and dumb like I was. But the thing is, Johnny, I was making profits, but I was spending everything I made. So, when you treat it like a business, if that's something you do, especially when you first start a business, you keep putting back into the business, right?
yes,
That's how
sir.
you get the business off the ground, but that's not what I was doing. I have a successful trade and I was making, good profits. And every time I made the profit, I was sending that check home and I was spending it, and I wasn't getting anywhere because I wasn't treating it like a business at all. I was spending money just as fast as I made it and I wasn't growing. and running a business when I realized that, what I was doing, man, it was a big shift, big change for me. So knowing when to take profit is very important because I found that to be one of the hardest things when I first started trading. Knowing when to take profit when you're in a trade. And profit is profit.
What's the opposite side of that?
Shoot, you have to be willing, to understand that it ain't gonna always be a profit. Sometimes you're gonna have a loss. Let me say something, and I want everybody to pay attention on this one. I don't care. I think you should write it down. But most of the time, people focus on how to be a good winner, and we always focusing on, how to win. We want to be good at winning. But let me tell you, if you can master one thing when it comes to trading, if you can learn how to be a good loser, you'll go a long way in this business. Say it again. If you can learn how to be a good loser, that's the people that last and make it when it comes to trading. Not the people who can be good winners, but the one who can be a good loser. Some people can't lose and do that in a good way. Losing is going to be a part of your trading. But if you learn how to be a good loser, what I mean by that is learn how to take the loss, minimize the loss, and move on. Because what I learned is sometimes the loss that I have taught me so much more than if I would have made the profit. And then when I get into another trade, I end up doing much better than I would have done on that last trade. And I make the profit back. I make the money that I lost back and some because I get better from learning how to lose. And I hope that is something that makes sense to everybody.
You want to make sure that if the formations are correct, then lay out your plan and run your plan, but don't be a thrill seeker.
I missed that one, Johnny.
Did you miss that one?
Yeah, I went for the gusto and got bit. So in that video, we did hear something about controlling your emotion. I want y'all to know you're going to hear that so much throughout this whole entire course, but that was pretty good. So rule number 8 is know your position in the market. It's very important to know your position in the market. And don't forget it. How many of y'all saw over the holiday, over the Memorial Day weekend, Dr. Melvin had posted that she was in this trade and she actually forgot about it. She was so busy with life and the weekend and she thought about, oh, let me go check on my trade. And she had, she made $2,000 on that trade. And I love the fact that she had, shared that with us because it shows us how many times have you heard that you always got to sit in front of the screen and watch the market. Not only was she not watching, she forgot she even had to trade on. But you got to know your position in the market. When you get in the market, what is the position you have? And that's important, So there's 3 positions that we can take when it comes to getting in the market. And one of the positions is called being what's called long the market. If you're long the market, that means that your order was filled and your position is long the market, meaning that you are bullish trading the market to the upside. Okay. One of the things, if you don't know, you're going to learn in this group, in this course, that we can also make money when prices are going down. So we can reprogram the thinking that we had that when the market's going down, everybody's losing. But another position we can take in the market is called being short the market. What that means is that you're bearish the market, you're trading the market down. You put an order in, you got fill, and now your order is short the fill, having you short the market. Prices are going down, and you're trading in that direction. short the market. There's also one other position we can take. We can also be what's called out of the market. We're on the sideline watching the market. How many times you see me post something and saying keep watching? That means I'm on the sideline watching, waiting for, like Johnny said, for things to set up or whatever it is that we like to watch for on the chart. I'm waiting, being patient, and letting the market form and do what I want the market to do. I'm out of the market at that time. So long the market, short the market, and then what's called out of the market. All right.
This is probably an important rule because I bet you $1 to a donut it will end up on a quiz sometime between now and the end of the deal. So my question is this: to be long the market, what do? I buy a contract, right?
Mm-hmm.
If I'm short the market or bearish, what do? I sell the market. I sell a contract.
Right.
And if I'm out of the market, I have no position either way. Okay.
Right.
So we want to learn to trade different markets as well.
That's right.
You know, how does corn relate to livestock? How does the interest rates relate to SOFR or the European dollar? How do different, what's going on there's all these different commodities you got different things happening. So you might want to trade different markets.
Absolutely. It gives you more opportunities to take advantage of too.
And if you're trading those different markets, just like we talking about going long and short.
That's right. Rule number 2.
Trade it in both directions.
Trade it in both directions. You know what, Johnny? The thing is, and I don't mean this in no kind of harm way, but we really not concerned or really don't care what direction prices are trading in, guys. We don't want, all we want is for prices to be moving. And that's what's so wonderful about our system. We just need prices to be moving. It doesn't matter if the market's going up or going down. As long as the prices are moving, we can make money. If we, are trading and using and following the system. And prices are always moving. So there's always opportunities to get in the market, whether it's trading it up or down. And if you don't know nothing about understanding how to trade the market down, you're gonna learn in this course. So get excited about that.
Rule number 11 is we want to stay humble. The minute you think you got it all figured out, this market will tell you you're wrong. Or it will humble you. So one of the things that I think is so important, and we're going to cover this over and over again, about using formations and watching the technical side of the deal. But just like we're talking earlier about the fact that price of livestock's been going through the roof. Why? Screwworm. Supply has gone down, which means demand has gone up. Okay. But just because I learned that this week doesn't make me a know-it-all. I still got to go back and look at the charts. I got to follow the charts. And that's to you, Delvin.
Yes, man. That stay humble one always resonates with me, man. Cause people ask me why I got so much respect for the market. It's because the market, the market made me respect it. You know, I definitely stay humble when it comes to the market. That's a good one. Using the charts is something that I can't stress enough. Um, especially when it comes to using the system that we teach. Um, it's all about the charts. We make our decisions from the charts, so the charts are very important. And if you don't know how to read charts, don't get overwhelmed or excited. We're gonna show you and teach you how to read the chart. At some point, we didn't know how to read a chart neither. But don't feel no way about it if you don't know how to read charts or charts make you feel some kind of way. We're gonna go over charts over and over and over again because we're gonna have to get to a point where we can read these charts. They talk to you, they speak to you, they tell a story, and we need you to be able to see it and understand what that chart is saying. So just know it's gonna be a lot of going over charts going out through this course, okay?
This is a tough one for me. Be patient.
Mm-hmm.
We teach you about formations and charts and how to watch and what to do. But guess what? I got some money, so I want to get in a trade.
Hold up, Mr. Scott. Uh let's not ski past that. For you who have been in this for a minute to be as transparent as you just was, to say this is tough for you is very important for me, sir. I don't know about anybody else, but that was very encouraging. For somebody to be in it as long as you've been in it, because I've watched when we on the Zooms or whatever. That was very transparent. That was very magnetic for me. Thank you, sir.
Thanks, Jamal. But here's the key to it. I got some money and I want to get in a trade. And I want to trade corn. If I jump in that trade, no matter which direction, I've told you, we have no clue which way the market's going to go. But if a formation is forming on the chart, if we're patient and let it form and give us the signal on when to enter, I may not get in it for a day, a week, a month. But the chart has to tell me when to get in it. Not just because I got some money and I want to get in a trade. So we've got to be patient. If we're not, we risk losing money. Okay.
Yeah, very important, Johnny. And just to add 2 cents on that, man, we watch for things to take place and form on the charts, and we have to be patient and let those things happen. But I wasn't always patient when I first got into this. And some people say, man, I can't believe that. But yeah, trading helped me become more patient. But I didn't used to be. Because like Johnny said, man, I got this money. I'm ready to go, man. Ain't got time to be waiting. Shoot, man, I got money. I need to make some money. And patience was something I had to work on too. But trading helped me become more patient. And that's one of the things, like Johnny said, it's the key one, the big one. So this one too, I said we're going to hear this over and over and over and over. And you heard on this video how important it is. Trading is so emotional. may not understand it, you may understand it, but once you get into it, you will realize this is so emotional. Whether you get into a trade and you're making money, it's emotional. You get into a trade and it's going against you and you lose the money. Your emotions kick in. But you got to control these emotions, like they talked about in that video, because it's so important to control your emotions. Because when you don't, a lot of times you make irrational decisions, and that causes you to start breaking some of these rules, like being patient, like having a plan, following the system. You know, you start breaking these rules when you let your emotion get into out of whack and they take over. So just know this is one of the main rules, and you're gonna hear us talk about this over and over because it's so important. Emotions kick in when you get in a trade, and all these rules sometimes they go right out the door. As soon as the trade starts, you forgot all the rules that you went over because the emotions take over. So control your emotions is gonna be a key one for you. All right.
Rule 15 is follow the trend. The trend is your friend. Whenever a trend is established, the market tends to continue to trade that direction. There's no way that we're going to pick the top. We're not going to consistently be able to pick the top in the bottom of a formation. So the best way to make money is to follow the trend. Okay. Now, forgive me, but I didn't set this up. Barbara did. And now that, so rule 16 is risk management. We've got to be able to control the risk associated. And the question is, why would you want to limit the number of trades you have on when you could profit, or I'm sorry. Now, why would you want to limit the number of trades you have? And how does that relate to how much profit you can make or how much loss you could make? You know, and I think Delvin can give you a couple of really good examples of this.
One thing about that risk management, Johnny, we got a lot of rules that we cover. And we keep saying this is the key one, this is the main one, big one. And this is very important. As a matter of fact, you may have heard at some point that most people get in the market, start trading, and lose money. And why is it that most people get in the market and are unsuccessful? This is the number one reason right here. Risk management is the number one reason why traders get in the market, lose money, and end up being unsuccessful, not having this. And I can give you story after story after story because I had no clue about risk management, even what it was. Definitely wasn't using or practicing it. I've gotten times, like Johnny said, where I've gotten into the trade, guys, and I literally risked my whole account on the trade, 100% of the account on the trade. But I wanted to make money on that trade that bad. I had my whole account at risk. So if that was 5,000 or if it was 10,000, whatever was in that account, I had the whole account risked on that trade. Ludicrous, made no sense, but that's because I was inexperienced, didn't know what I was doing. But risk management will help you not do things that way. And if you go through these rules that are attached to the risk management, you'll see a lot of stuff that they were just talking about in that video are in our rules. So very, very key one, Johnny.
Okay, number 17, we're going to limit the number of trades you have on at one time. Okay. Kind of like what Delvin was talking about Dr. Melba the other day. Forgot she was even in a trade. You know,
Yeah.
what if that trade was going against her? Okay.
Even Johnny, if you in that video that you just played, man, you know, it's coming right back to that about when it says about the number of trades. But just because we have enough money to cover the margin and we get into a trade doesn't mean we have this type of account to allow us to put on another position. You may need to just stick with that one trade until your account grows where you can take on more than one trade. Don't do things like I did. I have on too many trades, and then if they all go against you at the same time, you'll have the same thing they talked about in that video where you'll be on what's called margin call. And that's something where you don't want to be. So you got too many positions on, your account size can't handle it. And now you're in a position where you owe the market. And that's what happened to me 3 times over my journey. So it's very important about taking on a lot of positions when your account size is not there. And we'll get into that more throughout the lesson. All right.
All right.
Hey,
This-
limit the risk. Go ahead, Johnny. Cover that.
Limit your risk. You know, and that's this is important because, like I said, you can lose. You can not only lose what's in your account, you could lose your house. Now, don't want to scare you, because the way we're going to limit our risk is rule number 19. Always, always, always use a stop loss. We don't get into a trade without a stop loss. Okay.
Ever.
So
No, there's no situation we get in where we don't use it, right, John?
no situation. So when you lay out your plan for your trade, you're going to know what your buy-in or what your selling price is and what your stop loss is. You're going to set that up when you set up your trade. Okay.
And going back to that example with Dr. Melvin, that's the beautiful thing about our system, our rule that we talking about, not always using stop loss. One thing we know, Dr. Melvin always uses a stop loss, so we know she had a stop loss in place, and that's what's so great about it. We can get in a trade and not have to sit and watch it, and have our stop loss in place, which limit what we risk on the trade. We can tell the market, this how much I want to risk on this trade. If the market goes against me and I'm losing this amount, I want to get out. And she had that in place. And stop loss works in 2 ways. It helps us limit how much money we risk on the trade, and it helps us also lock in and protect the profits we making while we in the trade. And we'll get more into how that works as we go over orders and stuff. But it has 2 different functions. It limits the losses, and it also helps us lock in and protect profits as we make them. But you gotta always have one. And did we cover 19, Johnny?
Yeah, that was 19.
All right. Golden rule, Johnny.
Yeah, it's to you.
Guys, this is so important. I feel that it's the golden rule, it's the rule of all the rules, because risk management is what we're talking about, and this is the big dog of the golden of the risk management, and that's where you are not going to do, like I just mentioned, risk 100% of your account on the trade. If you do what's called the 10% rule, and there's some, they even do a 1 and a 2% rule, but we do a 10% rule, meaning you never risk more than 10% of your account on any one trade. No more than 10%. And what I said, I did 100, right? Many times. Well, you never want to risk more than 10%. If you're using that practice, this is how you're able to stay in the market, even when you have a bad trade, so you can get into other trades that will help you be able to make the money you made back, make the money back you lost on the trade. But the most important thing is we don't want to be risking so much money on the trade that we don't have opportunity to have other trades in the future. So 10% of your account is very important because it gives you opportunity to get into a trade, but not just wipe up your account if the market goes against you. You'll hear a term in the market called blow up your account. And it may sound like something that sounds like you're growing your account. Your account is growing. But in the market, when you hear the term blow up your account, it means the opposite. That means that you wiped out all the funds in your account, and now you have to start over and fund your account all over again. So you never want to get to a point where you blow up your account. But if you use this rule, this is what helps you not get in that type of position. All right, Johnny. I think that was it, man.
Q&A, and we're at the 1 hour mark.
All right, guys. I hope everybody got value out the call. We went into some rules that we follow, our foundation, most important lesson, I believe, out of all the lessons. And we want to open up for Q&A. Any questions or comments that you may have, now is a good time and the best time to ask those questions before we jump off. So the floor is open. Anybody got any questions or comments?
Very awesome class. Very
Thank you, brother.
transparent. Very transparent class.
Appreciate it.
Had a lot of vitamin additives in it, so it wasn't like the last run for me. To hear the transparency that I heard in this class, not to say that it wasn't ever given in any other class, was very tumultuously profound for me tonight.
Yeah.
I just want to thank, I don't want to say it's almost a blessing like Miss Barbara and Dr. Melba shouldn't have been on here tonight. They would have been an additive for sure, like they are every night.
Mm-hmm.
We have this. But because you used to hearing the Miss Barbara and Dr. Melba being the support and resistance for this community. So to hear this tonight was the equivalent of that profound time that we had in the past on other calls. It's been very moving for me. If you notice, D, I haven't said a whole bunch. I just been like absorbing it like a sponge. Because tonight's class, I'm noticing even like the rule tags that you're using. I say them tags, but like the pages that you're using for the Zoom are different. So it speaks to the whole difference of it and the versatility of this community. And man, I just thank y'all. Man, it was awesome.
Man, appreciate it. Yeah, I'm glad you were able to recognize that we had a whole different setup tonight. Yeah, appreciate that.
Yes, sir.
These some different. Even the slides are different.
Yeah.
You're on your own.
Yeah. So appreciate that, man. Any more questions or comments out there?
I got one real quickly. I just want everybody to know that these rules apply both to whether you're trading futures, commodities, futures, or whether you're trading stocks, or whether you're trading Forex or crypto. All of these rules apply.
Yes. Great point. Does somebody else have a question or a comment?
Hey, Dylan, it's Pam. I just want to say thank you
Yes, ma'am.
for doing this. Hey, how are you?
Hey.
Just thank you for doing this. Giving me a good foundation to run with. And so I'll be here. I started this before, but I didn't complete it. So I'm back again. I think my mind is shifted and I'm ready this time. So keep doing what you're doing. And as the gentleman said earlier, you are a blessing to others and you're still here. So be encouraged. And I appreciate you.
Thank you. Appreciate it. Glad you came back, man.
Thank you.
Awesome. Anybody else got any questions or comments you want to share before we go? And if you're not in our Telegram group, I want to invite you to join the group. We have a Telegram group where we have these quizzes that you might have heard at the beginning throughout the week and in the updates. And I want to post charts and things that I'm watching. We do that in our Telegram group. So I should have put that in the chat where you click on the link to join. But one last time, is there anybody else got any questions or comments?